Hello and welcome to the Guest Education Global Leadership Summit. Thank you for joining us. We're pleased to introduce Courteney Donaldson, Managing Director of Centric Sectors, Christie Co, who's going to share some amazing insights on one of their upcoming reports on the impact of COVID-19 on the global childcare market. And I'll now hand over to you.
Lovely. Thank you, Danny. So good morning all, and as Danny says, following on from our inaugural report, which was published in December 2019 on the workforce, early childhood education and care workforce trends around the globe, during recent months, Christie Co's consultancy team have been working on a new report which will examine the impact of COVID-19 on global childcare markets. Now, our latest report, which will be published in April, will be exploring the impact of COVID-19 on a number of selected countries of focus, most notably the USA, the UK, Germany, Sweden, and Australia. Each of these countries are all very different from a structural early years landscape perspective, all have quite different market structures, different early years policies, funding arrangements, and each have different regulatory environments. So across our selected countries of focus, decisions that have been made by governments as associated to COVID-19 at a national, state and municipal level have all impacted in very vastly different ways. So our report will be examining the macro and micro market drivers, demand landscapes of supply of earliest providers in each of those selected countries. And we'll be looking at the emergence of COVID-19 in all of those countries. Now, they all recorded their first outbreaks between the 20th and the 31st of January 2020. But during this pandemic, many governments have taken very different approaches in terms of introducing, or indeed not introducing, strategies to deal with mitigating the spread of COVID-19. 12 months on, it's very evident that some countries have been far more successful in slowing the speed and impact of the virus compared to others. So across our countries of focus, early year settings have been affected in very, very different ways. Some countries had national lockdowns whereby settings were closed to members of the public and they could only cater for the children of frontline workers. Some countries have gone through multiple lockdowns like we have here in the UK. In some countries, early years providers had to apply for emergency licenses to remain open to cater for families and children of the frontline workers. And indeed, in some countries, such as Sweden, during 2020, early years settings remained open throughout the whole of the year. So our report will be considering the economic impact of COVID-19 and the repercussions that the pandemic could have on the global early childhood education and care markets. So one of the greatest challenges and threats to any market is uncertainty. Uncertainty can really stagnate markets for business buyers. And at present, alongside all of the market drivers and due diligence, financial appraisal considerations, some of the most notable gaps around uncertainty relate to the speed of vaccination rollout and also the prospects and rates of potential economic activity. So across our 5 countries of focus, we'll be tracking the economic impact of COVID on that country. And the differences are incredibly stark. So we've seen a contraction of 20.8% in the UK, 11.2% in Germany, and 9% contraction in the USA. But as an unprecedented event, and slightly unlike a global recession, there is uncertainty. While there's uncertainty over the short to medium term impact of the economic impact and recovery times, there's less uncertainty about the potential impact that COVID-19 will have on employment rates, or indeed has already had on unemployment rates. So thus far, the impact of COVID-19 across our 5 countries of focus, the unemployment rates most notably have soared in some of those locations. So in the USA, within the first 2 weeks of March 2020, unemployment rates shot from 4.4% up to 14.7%, which is absolutely astonishing. And we need to think about the impact of unemployment on nursery provision and demand from parents. Despite all of the challenges over the past 12 months that globally COVID has had during this pandemic, the importance of early childhood education and care has undoubtedly risen to the fore. All of those parents had to care for their children at home. They've realised how important formal, high calibre, high quality childcare is. During that first UK lockdown, broadly between March and June 2020, property markets were virtually closed. In March, my team and I had to place 183 business sale transactions on hold because operators and buyers were suddenly rallying to into a survival mode to try and assess the impact of COVID on their business. And as COVID hit different shores, different early years groups, and indeed schools were trying to impact on how they were going to operate day to day in this environment that was suddenly happening. But this stagnation in terms of market activity didn't last long. And during the early months that followed the Easter holidays, the domestic and transaction activity across domestic markets and international markets certainly began to gain further pace again. And this was no mean feat, given all the operational challenges that our clients and buyers were finding themselves in. So last year, despite the pandemic, and as recently reported in Nursery World, we actually closed over 90 transactions with sales including single assets and portfolios. And equally, we only saw a 0.8% movement in the price indices that we've recorded. So childcare businesses, early years childcare businesses, were essentially achieving sale prices in line with pre-pandemic pricing. So alongside domestic activity, international acquisition activity has remained incredibly strong, and global market activity has continued, albeit at a slightly slower pace than we've seen in previous years, understandably. So some notable transactions would, for example, include Babalu, which was Antin Infrastructure. They acquired the majority shareholding in Babalu. Babalu are headquartered in Paris, but they operate over 500 early years centres, caring for 20,000 children across 5 countries, notably France, Germany, Belgium, Dubai, and Switzerland. And that portfolio was sold off an 80 million euro EBITDA, and the transaction completed in November 2020. So the demand is still there. Transactions activity is still happening. We saw a 140% increase in buyer demand because the profile of the sector has been raised to a significantly higher level. So our report will discuss some of those most notable deals that happened during 2020 and also our predictions for 2021. And indeed, as we approach March 2021 and the end of Q1, it's wholly evident that pent-up demand from buyers is there. We've seen multiple transactions and sales of early years businesses, both single assets and groups, conclude during the first 3 months of this year. Looking forward, we feel really confident that demand fundamentals for early childhood education and care businesses remain solid. The sector is resilient. And we really think that the global market activity amongst early years and education businesses will bounce back strongly in the year ahead. The markets are incredibly fragmented, and the buyer appetite from trade investors, from trade buyers and investors, remains incredibly strong. There will be some impact from COVID-19. You know, some early years businesses, once the governments reduce some financial support measures that are available, we'll see some casualties because nurseries financially, some of them had it really quite tough. But we think some of those casualties will maybe be from private equity divestment due to overgearing, as opposed to any direct failure in business due to business performance. So we think there'll be an increase in supply of opportunities that come to the market during the year ahead, and lots of owners put their 2020 exit plans on hold. So that will further fuel market activity. We also think that corporate buyers that have got ambitious buy and build targets will try and make up for lost time, and all of this is expected to improve deal flow considerably. So there are lots of positives. but there are still challenges remaining, and our report will be investigating each of these areas. We look forward to publishing our reports in early April. It's an independent report. We produce these reports to educate, inform, and really stimulate debate. And our reports are produced for business owners, investors, and they're used as reference tools by policymakers around the world as well. So we hope that you find it an interesting and engaging and informative read. And our report will be available free to download on our website, Christie.com. And I hope that readers find it of interest. And I'll hand back to Danny.
Perfect. That was brilliant. Thank you so much, Courtney, for your for sharing some really interesting findings from your report. And we're definitely looking forward to reading it fully once it gets published. And you'll also be speaking as part of an amazing panel on early years tomorrow. So for anyone listening, please make sure you don't miss out on that. If you'd like to connect with Courtney, you can also do so through the networking system on the virtual event platform. We'd also love to hear from you, so feel free to share any thoughts or comments by sending us an email to marketing@guesteducation.com. We'll be on social media as well during the summit, so if you want to chat to us there, follow us on Twitter @guesteducation and use the hashtags #guestglobal and #guesteducation. We hope that you enjoy the rest of the event. Thank you, and bye for now.
Thank you.